Hey guys, it's Mohammed from ForexB, and today we are going to compare Forex and stocks side by side, and we're going to go through some of the major differences that exist between Forex and stocks so that it can help you choose which market you want to trade in, or if you have already decided which market you want to go, then it will help you strengthen your decision. So let's go towards the thing itself. So there are basically five key differences that we think exist between the forex and stocks, and the first one being the volume. Now, the difference of volume between forex and stocks is huge. Forex is almost $5 trillion per day market. So in forex, every day there's activity of 5 trillion US dollars happening. However, in stocks, $200 billion activity happens every day. 200 billion itself is very big number, but when we compare it to the 5 trillion market of forex, it kind of looks dwarf. And this is the main difference. And what it does is, with the massive volume of forex market, it also brings a lot of opportunities for new traders, and it allows instant execution of your trade. Whenever you want to buy or sell, you can just go ahead on your broker platform and then place your order, and it will be executed immediately. But in stocks, you have to wait for a little time before your order gets executed. Now let's move on to the second difference, which is the 24 hours market. So forex is over the counter market, and it is not restricted by any factor. That's why you can trade in forex 24 hours a day. It is practically not possible unless you're using algorithm, but we'll talk about algorithms later. So if you are trading by yourself and you're not using algorithms, it is you will be trading at your convenient times, but it is available to you to trade 24 hours a day and 5 days a week, because like forex and every other trading market is closed on weekends. However, when we compare it to the stocks market, it only trades during the working hours of work days, and that is like the 5 days of weeks, and it also closes on weekends. But you can see the difference between the timing. It allows for traders to trade that forex is available to you to trade 24 hours a day, and you can go ahead and trade any time of the day you want to. But in stocks, you have to stick to the working hours, that is almost from 8 to 4, or in some countries 9 to 5, and like 8:30 to 4:30, so like these kind of hours. So like forex stocks market opens in the morning and it always closes in the evening. Now let's go ahead and look at the next major difference, that is the liquidity of markets. So the forex market is very liquid, as we saw in the first slide, that it's a huge volume. There's almost $5 trillion activity happening every day, which allows the high liquidity of market. But the liquidity in stocks is very low when we compare it to the forex market. There are many advantages of more liquid market. Like in more liquid markets, the spreads are very tighter and the transactional costs are very low. However, in stocks, the liquidity is low, and it doesn't present you with a lot of options where you can make money. Let's move on to the next difference, that is the minimal or no commissions. So in forex, you will also come across some of the brokers which don't even charge you any commission to place your trade. So you might be wondering, well, how they make money? They make their money by on the spreads that they offer you in their trading platforms. If you don't know about the spreads or any other technical terms that we are talking about, you can go ahead on our website. The link is in the description, and you can read and start learning from the beginner section. So when we compare the commissions or the fees of forex to the stocks, in stocks you are always required to pay a commission whenever you want to place a trade. So even if you make money or don't, it doesn't matter. You will have to pay the commission, and your trade will be placed after paying the commission. Let's move on to the next difference, that is the market manipulation. So you must have heard about the GME, whose stock broke through the sky recently. So what happened was the Redditors, the community of Redditors joined hands, and they wanted to give tight time to the hedge funds who were trying to short the GameStop company stocks. So what they did is they bought huge volumes of this stock, and all hedge funds who have bet against that, like, they were trying to sell it short, and they were trying to decrease the price of the stock. So when Redditors bought a lot of huge volumes of this stock, it was really a nightmare for the hedge funds, because they lost a lot of money, because their bets were not being proven right, and the price of GME stock was going up and up, so which allowed Redditors to make a lot of money from this stock as well. And certain brokers also restricted trades from happening on this stock. So from here you can see there's always manipulation going on regarding hedge funds, and if you join hands, if some Redditors can join hands and affect the trading market as a whole, you can get the idea that the market can be manipulated, but you will never ever come across something similar to this in forex market. And because forex market is very huge, and it's really not easy for anyone to manipulate the forex market. It's really next to impossible. So let's revise all the things we have discussed above in this table, and you can also read the article that we have written about forex versus stocks by visiting our website, or you can also find the link in the description if you want to learn more about the forex trading and forex strategies and forex knowledge. So the first thing we discussed was volume. Forex has very huge volume, that is $5 trillion per day, compared to stocks which has $200 billion per day. And then we discussed the time. The forex market is opened 24 hours a day and 5 days a week. However, the stocks market is only available to you for only 8 hours a day, and it also is closed on weekends. Liquidity is the next thing that we discussed, and forex market, as we discussed above, is very very liquid, and it also has many benefits being with high liquidity. However, the stock market, when we compare it to forex, is less liquid. Then there are commission rates. In forex, you're not restricted, or you're not forced to pay commissions. The commission, or even if there are commission rates, the rates are very very low. However, in stocks there are fixed commissions for each broker. And then there's a manipulation in the last that we discussed about the GameStop, and where you saw that Redditors literally manipulated the market to go against the hedge funds. However, in forex there's no manipulation happening. So if you like this video, please consider subscribing and hit the thumbs up, and also do visit our website forexb.co if you want to learn more about forex strategies and learning. Thank you.